What's going on, everybody? Charles Moon here, the disciple of trend, with my incredible co-host, maybe this way, Howard Greenberg. What's up, my man? It's been a while.
How you doing, brother? What's going on?
Dude, Thanksgiving is tomorrow. Yes, everybody, happy Thanksgiving all. We are thankful for you guys. It was a tough schedule over the last couple of weeks. That's why I've been off and we haven't been able to do the podcast. But here we are. Day before holiday, everybody hit the road and probably already have a few drinks. And Howard's here grinding it out with me, and we're ready to talk Sam Bankman-Fried because it hasn't been talked enough yet.
Oh man, I feel like it's been Sam Bankman-Fried 24/7. I can't even tell you to when. I mean, it's just insane, Charlie. I mean,
how much sleep have you gotten?
Not a lot, as you can tell. I'm tired. It's not a lot. I mean, a lot of stress, a lot of aggravation. Quite honestly, this guy set back crypto a good deal. This is going to hurt on the regulatory front. You're already seeing the calls from senators. You already saw it was very easy for Governor Hochul to sign the Bitcoin mining moratorium in light of what the news is saying, right? She was very, standoffish about signing it before the election and even after. Now, not a problem. People lost billions of dollars again. It's just, and he stole it. He's just a fraud. I mean, this is Bernie Madoff.
Exactly. No, dude, if you folks haven't kept up with this is like, you couldn't write any, we say that a lot, but you literally couldn't write anything like this is like Mission Impossible. Like Tom Cruise is going to pop up out of nowhere with like SBF in his right hand.
Oh no. Yeah. Jonas Hill is going to be playing him. I mean, there is no doubt. That's a given. And that
this story is so crazy.
Yeah, right? It really is. I mean, just keep in mind that this guy basically was taking customer funds and just using them for whatever he wants, buying $121 million in real estate in the Bahamas. I mean, and just for background, for those that don't know, although I think everybody at this point does, Sam Bankman-Fried was the CEO and founder of both FTX, the exchange, second largest crypto exchange in the world, and Alameda Research, one of the, if not the most important market maker, and hedge fund in the crypto space. And the guy that was just recently bailing out supposedly everybody else. What we find out is he wasn't bailing people out. Charlie and I were bailing people out with our accounts at FTX, and we just didn't know.
You got that right.
And that's what's the problem, is that this is just absolute fraud at a huge level. And being in DC in my other role as the president of the American Blockchain and Cryptocurrency Association, I've had to field calls from, Capitol Hill asking questions because he was the face of crypto in this town. He spent millions and hundreds of millions of dollars on, whether it was campaigns on both sides of the aisle. He just wanted to get himself, ingratiate himself so much into the space that it's insane.
Oh yeah, he played to both sides of the fence. He greased a lot of different pockets. There's a lot of different things and a lot of different texture to the story. One of the things that I feel like hasn't been talked about a lot, but it's probably one of his like biggest criminal offenses, besides the fact that he just stole people's money, was that, at least in our world, the trading world, he was a flat out freaking front runner. This guy was loading up on coins and knowingly was going to get them, what was it? 2 individuals, 3 individuals that got busted at Coinbase. They're getting the book thrown at them.
Right. Oh, and
they didn't even really make that. Yeah, they didn't even really make that much money.
They made nothing.
Yeah, and we're talking about Alameda, right? Like hoarding a ton of supply, getting these listed, and literally dumping it on the liquidity, trying to chase after it. And they did it over and over and over. And they were made to be believed to be great traders, when in actuality, turns out I don't know.
They were
Like,
terrible traders.
yeah, like how do you like
They
how
got wrecked.
so is arbitraging trading?
Well,
I mean,
that's neutral. The whole thing was they weren't happy with the revenue that arbitrage brings because as you know, arbitrage it eventually started to even get less and less as other firms got involved, and as you get more liquidity in the market, those spreads go away.
yeah,
So what they did is they went from being neutral, and they were always claiming to be neutral to the last day, and they weren't. They were making directional bets and making terrible directional bets, and then doubling down and tripling down and quadrupling down and
to
just
stop.
continuing to go down the rabbit hole.
Yeah. No, more than anything, he thought he had enough cash that he would always be able to like basically bail himself out in the sense cost average out of a way of a loser. And that tells you right
Right.
away that he wasn't a great trader. But number two, they obviously had zero risk management. They fell into the trap that, oh, that can't happen to me. And it did happen to them. That there's these pseudo bailouts that they were given to other firms was really to cover their own tracks. They really had no choice, right, Howard?
They were, yeah, it was to cover up their losses again. The reason that they did it with Voyager and Celsius and BlockFi is that if they went to bankruptcy, or when they did, they came out the other side as one of the creditors. So they needed to cover all of those losses. So that was the only way to do it, really. And they were using a coin that they created, FTT and SRM, Serum, and the FTX token. And what he did was these what's now called like Sam Ponzi economics.
Right.
They would be really huge, huge circulating supply. No, not huge circulating supply. Excuse me, huge supply at the end of these coins, but small circulating supply, so high float. Or excuse me, the opposite, low float. So there was
float.
no coins to trade, low liquidity. And then, like Serum at one point had like a $10 billion market cap, which was ridiculous. It wasn't doing any business, but there was no liquidity and people wanted to use it to facilitate the trading. And, that it just, they took off and they lived off that. Then they collateralized those and they made them into loans and they leveraged themselves out like DGen and Vegas.
Dude, this guy was okay. There's a Reddit video. It's actually it was an exploit on Robinhood. It's called The Gulch. And this kid was able to somehow manufacture, manipulate, and get enough credit in his account that actually was reflected as cash. For some reason, Robinhood just decided, like, if you sell puts or whatever, they'll divert money into your account. So he was just going, like, selling these, like, 4-cent puts, and he just did it, like, several thousand times over. And then he made a bet against Apple on earnings. I think he bought puts on Apple, and Apple like launched, and his initial reaction was, ooh. And so like it's almost like what SBF did with their over leveraging, and really it turned out to be that he was overly confident about the viability and strength of FTT. It looks like everything is kind of tied back to FTT, right? Between Alameda and FTX. And, you got to wonder if FTT didn't tank, would we be talking about this? I know CZ came out and said that.
Yeah,
that
two
comment.
things made it, took it, and it was both done by CZ.
Yeah.
One was when he said he's selling FTT, and two, that they might not be viable. So that started a run on the liquidity that he had, because remember, he was using our funds.
Yep.
So as long as those funds were there, and again, they had a ton of trading volume, they had a ton of money on there, second largest exchange in the world. As long as he had that ever going bank account, rotating bank account for him to use, it wouldn't have got caught. And again, the second part, like you were saying, yeah, if FTT stayed above $22, $23, again, they would almost never get caught. I mean, eventually they would have. It would have just continued, because they'd make more bad investments and they'd make more bad trades, and eventually, would implode even at a bigger level. That's why, I get so frustrated when you hear it, but it's true. It's lucky that it happened now as opposed to later. when they were even a bigger part of the ecosystem than they already are? What if they were number one? What if they had gotten CFTC approval to, clear some of this stuff? Although I will say, all of the entities that were regulated are all viable and still viable assets. So like they bought LedgerX, the CFTC regulated exchange, that is going to get sold off as a viable asset. So is probably FTX.US going to probably get sold off as a valuable asset. In fact, there's rumors Justin Sun's looking at it. My favorite person.
Yeah. When we kind of look at, when we kind of hear all this information coming out, it just seems so much it's so much more obvious now. But it's surprising that more people didn't talk louder about the red flags that that started trending and got obviously a lot more prominent after the story. But apparently some of this has been out there prior to. Mark Cahotis has been, he's been like SBF's like number one enemy. He's been calling him a scam. He's been calling him a scam for quite some time. But there were things like, for example, the wiring instructions, right? If you're US based, it went to FTX, but if it was an international wire, it didn't go to FTX. It was showcasing as Alameda.
Yeah.
Yeah. And remember, these are supposed to be completely separate entities. So that was like one of the initial, like very glaring red flags. It's like, I'm trying to send money to FTX. Why is it going to Alameda? Maybe people just didn't know that they were supposed to be separate. They just assumed, because SBF, it's okay.
I will say, in their defense also, that was at a time when crypto companies were still having problems getting bank accounts.
Oh, so I don't doubt it.
Yeah, so you saw certain things like that, and you knew that he was Alameda. You knew he came from Alameda.
Right.
You know what I mean? So that didn't set it off for that. The other thing is there's a lot of calls that part of the reason look, he's still getting fluff pieces written about him. He's going to speak at a New York Times conference on the 30th. He just tweeted it. I mean, it's absolutely insane. If that's the case, and we've seen fluff pieces by the New York Times, by the Wall Street Journal, and a lot of accusations because he was a heavy investor in the parent companies of a lot of these different media companies.
Yeah.
Semter being the biggest one.
Which one?
Semter, I think it is.
Yeah. So there was a tweet that went viral. Forgot her name. I just, it was just on my timeline, but she was basically kind of flipping the tune and saying, well, what about this? What about that? What about this? What about that? And in her comments on that tweet, everybody was tagging their first seed investor, which just so happened to be SBF.
Yeah.
And it's like, how could you be perceived
Semaphore.
Yeah. How could you be perceived as being a neutral outlet when your entire lifeline of this company started and was created and was heavily initially backed? The seed money came from, right, SBF, right? So you see it with the New York Times. You hear Kevin O'Leary. I mean, that's got to be some of the Kevin felt very uncomfortable saying it, but he did say it. They asked if he would give SBF money again, and basically Kevin said, "Yeah, but under certain circumstances."
It's crazy that somebody would. I mean, to me, it's just crazy. It's just because the part that we're learning is that it was all lies. It was all smoke and mirrors. You know what I mean? Again, Alameda was made money when the times were good, as all the other hedge funds did. But when the contagion hit and everything hit from from 3 Arrows Capital and Terra Luna, at that point, you see they were already going south. And then, all of these Sam coins were really financing such a large part of that empire. Whether it was Serum or Maps or Oxygen, there was literally dozens. And he was pitching them knowing that they were just pure money grabs for him. So, and this goes to that whole effect of altruism, where that's, being thrown about as an excuse that, he felt he was like Robin Hood, which is crazy. No, he was a fraud who lived in who spent $121 million on real estate in the Bahamas.
Well, okay, so we're gonna get back to that because the follow-up story to that, plus other
His
things.
family is insane.
Yeah,
His
no,
parents.
But I'm gonna ask you a question it's kind of serious. It's kind of out of right field, and I'm interested in your answer. So hope you're ready for it. Okay, so you and I have discussed this. CZ, what if he's next? What if, for those that don't know who CZ is, he's the owner, founder, creator of Binance, right? He's basically the big whale now. Maybe not the biggest whale, but he is the big boy in terms of, the industry that he systematically has taken out a lot of his competitors. What happens, man, if he goes down or something happens? BNB crashes, and all of a sudden exposure.
At this point, it's like I told people, I've had so many people ask me about self-custody recently from clients, especially like in our foundation room at Prosper. And I've said, listen, I've got to be honest. I don't care what exchange you're going to tell me next. You have something on, take it off.
Yep.
Because if you had asked me 2 months ago, was FTX safe? I would have absolutely answered 100% yes. So, I can no longer say that anything is safe on any exchange from Coinbase down. Do I think Coinbase is in problems? No. Do I think Kraken has problems? No. Do I think that KuCoin has problems? No. Do I think that I'm forgetting one other I always that I want to include in this?
Kraken.
Binance.us. I said Kraken. I think all of those are safe, but again, I really would have said FTX was safe.
I mean, why trust it? Why trust it right now?
It's just not worth it. I mean, if I can show Scott Bauer how to do it in a half hour or less, then.
But that's also a concern, right? The run on retail, the run on big money, and when there's nothing but outflow and no inflow, and all of a sudden we talk about stability, leverage, solvency. These are without a doubt, I'm sure CZ's already kind of not backtracked, but look back and double check, maybe dotted his I's and crossed his T's several times over here just to make sure. But, the one thing that I'm seriously terrified about, I'm obviously not that deep into this industry, would never call myself an expert, but am I a speculator? Absolutely. Am I a believer? Absolutely. Howard has definitely helped in that thesis. But what I'm seriously concerned about is the timeline of recovery if something like CZ goes down. It's like,
well, you got to remember with CZ, though, is that, they didn't raise money. Binance made its money. In other words, they were buying Bitcoin, and they are like one of the biggest holders of Bitcoin since 2014. So, and keep in mind, they were buying it at 300. So, and they were buying large quantities. So he's never really gone outside for outside funding. Whereas FTX was propped up by 16, AZ 16, Anderson Horowitz and Sequoia and these other guys, keep in mind that Binance had that money, and then Binance has smartly, I call them the Amazon of crypto. They've gone and they were really good at getting different components of the ecosystem, whether it was wallets. Trust Wallet is them. He bought that. That wasn't them to start off with. He's been pretty good about that acquisitions, buying custodians, buying,
hold on, Howard. Are you saying that they can't be over leveraged? That they could have bad risk management? By the way, Amazon now is over leveraged.
For Binance, I mean, no, again, you're asking, I'm going to give you the same answer I just gave you. FTX failed, and I wouldn't have thought that FTX would have. So now can I say that anybody else is doing better? No, but I can tell you what the differences between the two companies are that Binance is, number one, Binance is also run by, senior level management that came from some of the top Chinese and Japanese companies.
That's a big difference between FTX.
College bros from the frat house at Stanford and MIT who had never run anything else in their lives. And they have a lot of those people. And Brian Brooks, who was the former controller of the OCC, who was in charge of banks, was their CEO of Binance.us. So there's been a lot of that. They've hired people, they have on their compliance team the former head of like the ECB. So, there's a whole different level of stuff. What we didn't realize was,
I agree.
yeah, and what we didn't realize with Sam
listen.
Bankman-Fried is that he didn't have that. He didn't have a board of directors. I didn't think, to me, I didn't invest in FTX, so I wouldn't have looked to see these things. Right. But who the hell invests all those hundreds of millions like Sequoia and doesn't get a seat on the board? I've never heard of that in VC world.
Hold on. So I was just asking that question, just curious as to what, obviously your thoughts.
I mean, the whole one that could go down is DCG. I mean, that's the one. That's the other domino, and that's domino is almost as big, if not bigger, quite honestly, into the infrastructure of crypto. I mean, keep in mind that Genesis and DCG is basically the prime broker of all crypto. So they're the counterparty to all of these,
How could they go down? How could they go down then?
Because they had $1 billion of uncollateralized loans and losses that are now outstanding debt from Three Arrows Capital.
Just like everybody else.
Yeah, well, but $1 billion. They were the largest. Right. They're now the largest creditor to FTX at 175 million or whatever it is. So what it is they were working off small margins and they got hit. And now the other thing is the same as FTX. All the institutions are pulling their money out. So they were like the central banker, where the Goldman Sachs, which might have been Wintermute, the moneymaker, kept their money, and that's where Fenbushi kept their money, and that's where Tiger Global kept their money. Well, guess what? Those guys are now self-custodying all that stuff. They took it out of there.
Oh, I bet.
So now they don't have.
I mean, the run on the banks has been coming for a while, right?
Yeah, I mean, but in such a huge way, so that any kind of buffer these guys had, and again, they were lending and borrowing, so they were fractionally reserved. Right. I mean, that's the problem. So that so Genesis goes down. Can it go down without taking down the rest of DCG? Because again, DCG is a huge conglomerate that goes from media with CoinDesk to Foundry, the largest Bitcoin mining pool in the United States.
Okay, hold on. So what happens if they go down? What happens? What happens to Bitcoin?
Yeah, that's when we go to 12 or 13,000
at the very minimum, or do you think that's where we pause, rebound, and maybe find a floor?
The next contagion of that size would take us to 13,900, in my opinion.
It's not terrible. Quite honestly.
Not good.
I agree. I agree. Good. But there's a lot of cries for 5, 6 again, which
well, there's a few things. I mean, there's so many things and so many variables that come in. So if DCG goes, are they able to sell Grayscale off? Because remember, DCG is the Grayscale Trust. That's them. That's DCG.
Yeah.
So if they go under, does that somehow contagion go to that? And there's been a lot of, reassurances from them of how things are. And we know that all that Bitcoin is on Coinbase. Right. They wouldn't release the addresses. If you go to my Twitter, you'll see that I have the addresses there. One of the on-chain sleuths did all of the work. I mean, it's unbelievable what the guy put together, but showed where the addresses in all 364,000 Bitcoin that Grayscale controls are in these 2 wallets. But so the talk there is if they wind down that, right, then now all of us that own GBTC are given the option to either get our money back, the cash equivalent, or the Bitcoin. If people pick the cash equivalent, that Bitcoin's automatically going to be sold. So how many people, and a lot of people can't take the Bitcoin.
Okay, so right? I heard about that, and I've heard 2 different things. So I'm glad you're clearing that up. So they'll actually liquidate.
So they file a Register M, I believe it's called.
Yeah.
The dissolving of the fund. If they say they can no longer provide that. So there are, like I said, there's a lot of different components that go into it. Do I think that's going to happen? No, because number one, that brings about $800 million in fees a year, something like that. And somebody will buy it because it's a great investment. And the talk would be that Fidelity would be the first person to jump in with the way that they're trying to get into the business. They'd take over the fund, and that would give it a good chance to become an ETF even. So, there's a lot of talk there. But the bottom line is, you ask me worst case scenario. Worst case scenario, they go register M, and they say we're dissolving the trust. Now, from there's already been talk of a couple of things. So people who do take Bitcoin, and remember, there's a lot of large institutional investors. This is like ARK Invest is the second largest holder. The problem to me is the largest holder is DCG. Well, they'll need to sell some of theirs, right? Because they got to pay their bills. So for them, they would be doing it to unlock the ability to sell their Bitcoin and not at a 40% loss.
The rumor is that that if they did file and were shutting it down, that they wouldn't be able to give people's investment back in crypto, that it would have to be cash. And people were afraid that meant that it was a massive wave of liquidation.
No, so it's from what has been reported and what I read, you'd have your choice.
Okay, so having a choice is a good thing, because a lot of people actually take the BTC.
Well, except that, remember, again, the ones that are the largest holders can't, right? So ARK can't take the Bitcoin. They have to take the cash.
Right.
And then there's a couple of funds after that, same thing. I don't think
Rothschild. Did you say ARK couldn't?
ARK, right? Yeah.
Why couldn't they? Why couldn't they just transfer?
Because I believe it's in the innovation ETF, which doesn't have the approval in their current holdings to hold crypto. They hold proxies and the cash settled derivatives.
I got to see how that works, because I was wondering if they would be able, because I mean, obviously they do.
No, to my knowledge, and I'm 99% sure on that. I'm not a tax expert, so I don't want to, or security.
No. I don't know anything about it.
But I'm as sure as I can be that they cannot take it, because that because of the fact that they're an ETF. Otherwise, she would just buy it. I mean, she's made it clear that she buys it as a proxy because she can't buy directly. So there's that.
Loading up on coin.
Right. Oh yeah, she's been back jumping in big time.
Yeah,
what do you think about that? Coin. So I mean, I have some questions for you, Charlie. I'm sick of SBF, man, and I really do. I'm going to say it here again. I hope he goes to prison. He deserves to go to prison. This is fraud.
Can I bring this up really quick? That MFer had the head of regulations for FTX. This was the same clown that was running regulations for Ultimate Bet. And UB owes me money. UB owes me money because that's one of the poker sites I used to play on. And this was the guy that was caught on tape conspiring with the CEO.
Oh, yeah. Yep. And saying cover it all up and blame it on that other guys.
Yeah. And they're saying like FTX is kind of making that spin, but this guy is now out the door. But I'm just saying that was the head of the regulations, the guy that ran a scam poker website. And it wasn't just a small scam. It was a huge scam.
Yeah.
Yeah, man.
Yeah. Oh, yeah. It's like I said,
FTX, the story is incredible.
The fact that no one vetted this stuff out. Like, again, me as an investor, we never bought FTT in my room because it wasn't available on most of the US ones until recently. So we never got involved in it. I never invested in FTX, and I honestly didn't have any money on the exchange. In total disclosure, I did not use FTX. So, I didn't lose anything, but so I didn't look at this stuff. But now you look at it, and exactly like the 8 people, you're like, how did that person become the CEO of Alameda? Whoa, why did these 2 people just step away at the same time? The person who's running FTX.US and Sam Trabucco, the guy that was running Alameda, both resigned at the same exact time. You start to look at stuff. Your auditing firm touts itself as the first metaverse-based accounting firm. That's not who I want doing the auditing.
Yeah, they say that your account's address is the metaverse.
Yeah, Prager. So there was a lot of like red flags that people really that weren't covered in mainstream media. No. You know what I mean? And
he was a darling.
Yeah, and that were covered up. But my questions for you is, okay, man, all of these things have been beat to hell. Do you see any light in the future of like a coin? Silvergate, I know I shared with you and you'd already seen it. Found a sort of angel investor to bail them out, right?
Yeah, so SI is interesting. They had news earlier, 9% investment from the Block One.
Yeah, the developers behind EOS.
Yeah.
the blockchain.
They also had another 13F filing, I think, that came into
Yeah,
play
it
as
was
well.
one was Block One and one was the CEO of Block One.
Okay.
So two different, and one was for like 2,300,000. They're very close in the price.
So, well, if you own more than a certain percentage, then like you have to, I don't know how to explain it. Like there's a passive hold, and then there's something where
Right.
you're actually part of the corporation, and then you're not responsible for any outcomes for the corporation. So people are taking these investments, and as long as you remain below that, I think it's 10% or 12% threshold, you're just considered a passive shareholder, like a retail share. But
yeah, absolutely.
so SI, interesting. I don't know if I would want to touch it besides maybe just swinging momentum. After all those things that you had said, I sure as hell need to know what the hell's going on behind the scenes, which I don't. That's something that I would have to rely on you. If we look at it just from a charting standpoint, I'll pull this up really quick here. They're in a really strong, consistent like pricing trend. And so in the near term as well, if we even just like promote it in the just more shorter term fashion, they're in a really pretty tight channel. So once they start breaking out through these channels, maybe I'll feel a little bit more confident in reliability to the upside. But the one thing that I just don't like doing is buying stocks that are surrounded by bad news. I
Sure.
just don't think that's like, it's like literally trying to walk through, landmines or walk around landmines.
Yeah,
And it
it's like I
just,
told you, I'm miserable right now because I'm rooting against Bitcoin's price right now because I want this last capitulation to come. I want I need, if DCG is going to go down or Genesis, I want it to hit already because I can't just sit here and watch it and wait for the next shoe. So, and that's what it is. How do you go long right now? I think it's crazy if you're not in a tight stop loss with a tight, swing trade type thing. And I mean, I know it went up. A lot of stuff went up. I've got couple of friends that got in on Solana, but man, I just couldn't do it. I mean, I'm going to be honest. It just, knowing what I know about the fragility of the ecosystem right now, you could see us go right back to that 15.5 to 13.9, like I said, and that would happen in a matter of 4 hours.
yeah,
It's not going to be a drawn down one.
Well, one thing, Howard, you've always done is done your best to warn everybody. I mean, you've been on top of pretty much every single one of these like controversies and really helped save a lot of, my friends' heartache and a lot of pain. Same for our clients and same for our listeners. Right now for me, on a personal standpoint, I own, I was planning on accumulating, but I'm freezing off on that. Doing it with equities too. I'm freezing off on equities, but I'm completely offline. The only thing that I got running right now online is my helium. Who cares about that? That ain't worth anything, dude. It's worth air. So it's like,
hey,
whatever.
listen, Bill Ackerman, baby. Bill Ackerman's going to take
You want to take my 30 or whatever it is? Take it, dude. Don't worry, man.
I mean, I'm with you. I mean, I'm still accumulating because that's how I DCA into this stuff. I don't, again, I'm not going to be mad if I bought Bitcoin at 16 or 14 if it goes to 50 and 60 and 100 like I think it will. I mean, our girl Kathy Wood, she's still saying $1 million at 2030.
2030, yeah.
I just got to make it that far, Charlie, and you and I can buy that island. 2030. If it makes it to $1 million,
come on, man, we're gonna buy more than that, but let's go to Mars. When I think about Coinbase in this situation, what's unfortunate for them is that they're just gonna have to deal with FUD. That's like their business is solid from what it looks like, at least from the outside perspective. They've had to like literally be very reactive and proactive on social media to respond to like allegations and ease fears. And it's just what a pain in the what for a company like Coinbase to deal with. And now I'm pretty sure they got investors and insiders a bit shaken up and a little concerned because maybe some of those guys had exposure to FTX in the later rounds, and it's just like it's tough. I actually like Coin to the upside because they're positioned to be a very dominant player in the US right now.
Right. My only comment I would help you with there is, or from my side, is we're going to be heavily regulated in the near future.
Yeah.
The company that is best set up right now out of all the exchanges to handle that is Coinbase. So
They're
they'll win in
already
the
being
regulated
regulated
game right now.
very, very closely, I feel, because
because they're a public company. They're
yeah,
already
and
doing all the filings and stuff.
for me, like it's just interesting. Again, like I think what's going to be really important is what's the longer term picture. So the longer term picture for me on crypto is bullish, right? When moon. But like honestly, that also means that you should be strongly considering coin at these lower levels. I've heard talks they're going to be the next hood. They'll be back down $8, $9. Great. Buy some.
Yeah.
Again, this is a dominant figure. For me, it's like there's several things that I, as an investor and I, as a trader, absolutely love. And dominance is one thing, right? Dominance is extremely important. Well, what's dominance? Amazon is dominance. Google is dominance. Microsoft is dominance. Apple is dominance. People don't think Meta is dominance, but Meta is by far dominance. You may use one social media site and think it's the most busiest, but nothing trumps Facebook. I mean,
Yeah.
they
User base is ridiculous.
no, it's crazy. Yeah. So dominance is extremely important. Second is successful disruptors. Disruptors, that word has been tossed around a lot. We used to throw it to a lot of different companies. They're all worth crap now, right? Uber, crap. People talked about Lemonade being a disruptor. Crap. Redfin, Zillow, crap. Man, although I do like Zillow in the longer run as well, Howard. But the true disruptors, for example, Amazon was a disruptor, right? They totally changed the way we shop. They totally changed how businesses operate, specifically from a technology standpoint. Disruptors. These are companies that I like. And for me, Coinbase dominance, and in my opinion, because of these regulations, they're going to soon be a disruptor. They're going to figure things out. You know, Sometimes people have to go through a lot of heartache and a lot of pain to figure it out. But once they do, and they really, I don't know, find their niche, so to speak, it's a game changer. That's really how it is for trading as well. But for me,
Yeah,
I
I mean,
think
I think their connection with BlackRock, of course, is going to be a game changer down
that
the
could
road.
only help.
That might have got delayed a year or two, but like you said, it's definitely a time to probably accumulate. Not now, but like you said, at 8, 9, let me in.
Well, yeah, I don't think they'll ever get there. That's just a
No,
lot of chatter. I actually think so. They made new 52-week lows as by a few pennies, and I flat out said this is going to look to reverse, and it's only gone up since. People didn't
well,
believe me. People keep trying to short them. So what
no,
do you know?
even I mean, I wasn't trying to short them, but even I had trouble getting behind it. And my part again, but who did I used to use as the reason why? I said FTX is going to clean their clock. You know what I mean? That's what because that's what was happening. They
Hold on, but
were.
remember that the first day you told me to download it, and I did, and I looked at it, and I was like, man, it's all right. I would never touch that. For me as a trader, that's just something I would never use. Just not my kind of thing. If FTX felt like it was really geared towards the very new retail trader that didn't know any better, in my opinion. That's how their platform was really like aligned. It felt like because I've seen like kind of projects like these before. I know people that have developed and people that don't know how to code have been able to come up with these really cool websites. That's kind of what it felt like. I think that now we're in this position when we kind of look at the situation, the history that unfortunately that's being made, and how we could view this as both a catalyst and an extreme positive for the industry. Well, one of the key words is something you just said, which is regulation. Regulation is extremely important in these situations because regulation leads to validity. Now, Michael, don't get mad, but obviously it leads to politics in some sense as well. But in the full realm and full respect of where is where am I going to be able to make money in the stock market let's say from the crypto industry. If you ask me which choice would it be, SI or Coinbase, 10 out of 10, I'm going Coinbase. This whole thing with SI and the rumors of insolvency or concerns of insolvency and all that other, crap that you just talked about, not crap, but all the stuff that you just talked about, why would I want to take that risk? I mean, Coinbase was $400 at 1.2. It's not like they can't get back up there. I mean, why? SI is a little bit cheaper. They're down a little bit more, so they can come up a little bit higher. Well, they're the ones that's surrounded by the negative news that put them there in the first place. Where for me, Coinbase was, what do they call it when they're just like a victim of, they're just a victim of circumstance.
Circumstance, yeah.
Yeah.
Hey, by the way, just want to say, Andrew Ross Sorkin just confirmed on Twitter that he is interviewing SBF at the New York Times Deal Book on November 30th. There are a lot of important questions to be asked and answered. Nothing is off limits. Looking forward to it directly from the man himself.
Yeah, I'm okay with that. Listen, Andrew Sorkin is one of those guys.
He'll go right after him.
And if he doesn't, then we know
something's up. He's not a fan of crypto in general. He's a skeptic.
Yeah, no. Well, and if he doesn't, then something's up.
Then it's all over. Yeah. No, I'm sure he's sharpening his pencil. So I just wanted to add that in there.
Man, that interview might be lit. Is it going to be streamed?
Oh yeah. Believe me, we'll probably have to pay for it, but I will be getting it. No, I will be watching that one.
Listen, man, Twitter.
Same way as I've already been hitting up every one of my sources on Capitol Hill. I will be at the SBF hearing.
Ladies and gentlemen, just want to say happy Thanksgiving, and we're grateful that you are spending time with us to listen to this podcast, to hear Howard drop true knowledge, inside knowledge on crypto, maybe something that you would have never read, maybe you would have never known. I'm just here for the ride. Thankful for you all. Tips to rips. Leave a like, comment, subscribe. Let us know what's going on. Peace and love, everybody. Happy holidays. Until next time.
See ya.
This has been Dips to Rips with Howard Greenberg and Charlie Moon, brought to you by Prosper Trading Academy. Visit us at prospertrading.com to find out more. This podcast should not be considered professional, financial, and/or investment advice. By accessing this podcast, you acknowledge that Prosper Trading Academy LLC, PTA, makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information and opinions presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. PTA does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the PTA. PTA assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials of the third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein. Moreover, PTA makes no warranty that this podcast or server that it makes it available is free of viruses, worms, or other elements of codes that manifest contaminating or destructive properties. PTA expressly disclaims any and all liability or responsibility for any direct, indirect, incidental, special, consequential, or other damages arising out of any individual's use of, reference to, reliance on, or inability to use this podcast or the information presented in this podcast.